I know it's been a long day so far, so kudos to all of you guys who are able to, rough it out. And I know there's some other good presenters that are going to be speaking after me. The whole idea here is that hopefully we can share with you guys some of the things that are helping us that would hopefully help you. I understand that it's not, each different speaker brings something different. So at the end of the day, you just have to make the best choice based on what you've heard. And I hope that what I share with you today would be helpful for you as far as your trading is concerned. Okay. What I want to talk about is, the big elephant in the room, this bear market that we've now witnessed. One of the biggest things that I hear a lot of people say is nobody could have foreseen this, or how did we know, or is it possible to know where that this was going to happen? Where is the bottom is another thing I hear a lot of people talk about. And the idea is like, how do we navigate through this? How do we navigate through this? And some people believe that, it's too volatile. Some people believe that it is manipulated. But at the end of the day, I want to show you some key things that can guide you through markets, regardless of what's going on out there. And that's what I'm hoping to accomplish today. So let's go ahead and get started. I usually like to start with this question. Is the stock market random? Now, before I became a stock market trader and investor, I used to think it was random. But the more I became better at understanding technical analysis in particular, I realized it's actually not random, okay? It's not random. And the reason why we called our company Right Side Trading, just so you guys know, is because, anybody can go back here and say, look, oh, you should have bought down here, or you could have bought down here, or you should have sold up there, or even up here after the fact. The idea is, how could we have seen the warning signs ahead of time? How could we have seen the warning signs ahead of time that would have told us, wait a second, something is not right, and we have to position ourselves on the right side of the trade? And that's the reason why we call our company Right Side Trading, because even though data over here is important, down here was great, the question is, what do we do over here? That's the big question. And that's what we're all about, is trying to anticipate, based on the data that we see, what the market is trying to do. So I have a saying that goes like this. People get excited about stocks that have made big moves. But in my opinion, I truly believe that the true credit goes to anyone who can train their eyes to see the setup ahead of time. Now, I know some people are going to be wrong, and then there's times when we're going to be right. But the ones that can actually see a setup and say, look, this is a setup, before we actually see the results, to me, I give those people more credit, because they're at least seeing something and trying to anticipate the market, as opposed to after it's all done. Because anybody can tell you what happened in hindsight. All you're doing is just reporting what happened in hindsight. We can't make money in hindsight. We have to be able to figure out how to make money going forward into the unknown. And so being able to train your eyes to see what are the setups that are beginning to tell us, hey, wait a second, something is about to happen, whether bullishly or bearishly, that makes us very, very aware and confident that we should be on whatever bias side we should be on, to be able to take advantage of those moves ahead of time. To me, I think deserves big credit. Okay. What we'll be discussing today: modern candlesticks that works in today's market. I love candlesticks. I cannot trade without candlesticks. I want to show you, I'm going to show you some candlesticks that, and the reason why I call it modern candlesticks is because, as many people know, there are tons of candlesticks out there, over hundreds of candlesticks. But the question is, which ones are working today? Because believe it or not, some of them are obsolete. And what I mean by obsolete is you don't see them in the day-to-day charts anymore. Okay. Or if they do show up, they show up maybe once in a year. And that's not enough. But there are certain ones that reoccur over and over and over, even in this present day and age. And those are the ones that I consider to be modern candlesticks. And so I'm going to show you some of them when it comes to that. We'll talk about how, because of these modern candlesticks, we actually were able to see this bear market before it actually occurred, right? We saw this, and I'm gonna show you some proof of how we saw that. And then what I'm gonna do is we'll navigate through this market. How can we navigate through this market successfully? Because the biggest thing I'm hoping to accomplish today is to help people see that technical analysis does work. I heard a lot of people say, well, nothing works. This time is different, right? And truth be told, this time is different. We haven't seen a bear market like this ever. So it is different. But the one thing that I believe stayed constant when everything else failed was technical analysis. For those who knew how to use technical analysis, they were able to keep themselves on the right side of this market or either avoid getting into the volatile choppiness market that we have just witnessed. And so I'm going to show you how you can do the same thing too. And the hope is that you will start appreciating, and if you already appreciate technical analysis, even appreciate it more and what technical analysis can do for us. Okay, so that's what we're going to do today. But before we do that, let me go ahead and talk about our risk disclaimer. Obviously, we are not licensed financial advisor. I am not a licensed financial advisor. So please keep that in mind. Everything I talk about here is just for educational purposes. It is not a recommendation to buy, sell, or hold any security. I am just simply a guy who learned how to use technical analysis to help me navigate the market. And that's what I'm sharing with you. Okay. All right. A little bit about myself. So I am the chief technical strategist over here at Right Side Trading. We are a technical analysis research firm. That's what we primarily focus on. We barely do any fundamental analysis for many reasons that I'm not going to go into today. Nevertheless, we focus more on technical analysis. I've been in the accounting and finance industry for about 17 years. Started investing too during that time in real estate, stock market, all that kind of stuff. And then in the last 8 years, I focused primarily on technical analysis. I was the guy that understood financial statements, how to read them, dissect them. If you understand what a forensic accountant is, I was one of those type of people. I was a forensic accountant, and I could see things and numbers that most people could not see when it came to financial analysis. But nevertheless, I decided to switch to technical analysis because even though I was analyzing a lot of companies that did not seem to be, healthy companies to go up, I saw the price keep on shooting up. And I was like, why is the price going up when the stock was not even a good stock? And that's when I found out about technical analysis. Or I saw some stocks that is, good stock that the price just wasn't going nowhere. And so I realized technical analysis plays a huge factor in timing when to get in or out of a trade. And I'm going to show you plenty of examples like that today. We specialize in identifying sound companies at attractive prices. Our goal is to minimize our risk as possible, and we want stocks that can appreciate in value. So we focus on price movements. We focus on patterns in the major indices. We trade stocks predominantly and ETFs. We also like IPOs as well. We look at dividend stocks. We trade around earnings, market cycles, and stock splits. And so these are the kind of things that we focus on primarily when it comes to our style of trading. I have a report. So let's get started. Back on January 24th of this year, January 24th, before this market crash like we've seen now, I have a report that we write over here at our firm called the Right Side Report. It comes out weekly. It's a weekly publication. And in that weekly publication, we basically just talk about what technical analysis is telling us. And on January 24th, you can see a snapshot of this right here, January 24th. This is a snapshot of it. To those who had subscribed to it, we sent them a report on that weekend, on January 24th. You can see right here. And I'm highlighting just a few of the things that we wrote right at the beginning of that report. And you'll see it a little bit more, blown up over here. We talked about what I'll be discussing. And I said that I'll be discussing the major indices. But the key thing was what I said right here, which is telling us that we should be prepared for a potential drop. And then we'll also look into the VIX okay? And how that is beginning to shape up with spikes in volatility. So most people know VIX has spiked like crazy now. But again, back in January, on January 24th, when we saw what was happening, this was way before the market actually, and I shouldn't really say way before, but shortly before the market really started tanking. But most people were still in a mindset of we were still bullish. We saw the warning signs that say, wait a second, the VIX is spiking. What's going on? You know, not only was the VIX spiking, but we were beginning to see data, and I mean that, like data on the major indices that we follow. We follow 5 major indices. The first one is the S&P 500, just so you guys know. We follow the S&P 500. We follow the Dow Jones Industrial. We follow the NASDAQ Composite, or the NASDAQ 100. We also follow the Russell 2000. And we follow the Dow Jones Transportation. So the Dow Jones Industrial and the Dow Jones Transportation. These are the 5 major indices that we follow. And based on what we see, the data that we analyze from a technical standpoint, we can kind of tell what is about to happen to the market. And I'll show you exactly what we saw that was telling us that, hey, wait a second, something was not right. And then we also look at the VIX, but we only look at the VIX once we start seeing some real serious warning signs taking place with these, right? And so we took a look at the VIX and said, wait a second, the VIX is spiking, something is happening. And that's why we wrote that in there. It says, we'll also be discussing, you know, and if you look right here, I don't know if you guys can read this, my goal will be to exit positions, okay? And manage a few trades that are still doing well. I'll be even watching those very, very closely. So it was without a question that we knew we were getting prepared to sell everything and get out the market, okay? Later on in the same report, we talked about something we call a market in unison, and I'm going to explain that to you once we get to the charts. But we said because the market is in unison, we expect the uptrend has now come to an end. And we need to be ready for either slow down at best. That's what we said. At best, market is going to slow down. And if it really turns out to be what we think it's going to be, market is going to reverse. And then look at what I said right here in the writing. And all this is also right here in here. I'm just blowing this up so you can see, because that's what it says right here. The writing is already on the wall. I mean, these are like bold statements saying, look, the writing is already on the wall. And then we went back and said, it is time to take profits, exit positions. The market is warning us to take heed. So, you know, knowing that type of information, like how could we be so adamant and so confident that, wait a second, this is not a let's wait and see kind of situation. This was like, wait. This is a warning sign. Okay, the writing is already on the wall. Take all your profits if you have any. I'm like telling people exit your position. It wasn't like place stops or anything. It's like exit your positions because the market is warning us to take heed. And so when people say the market is random, it's like that to me wasn't random. We saw the warning signs. People just haven't learned to see the warning sign. The good news is we can all learn how to see the warning signs. That's the best news. I remember back in the day when I used to get upset because people say, the market is manipulated. We don't have any chance. It's like, wow. Now it's like a totally different ballgame because it's like, wait a second. Okay, let it be as manipulated as it wants to be. As long as we can see wherever the manipulation is going, then we just put ourselves on the right side of that trade. Okay. But again, on June 26, 2020, we were already saying, get out. Take your profits, exit your positions, take heed. Something is about to happen to the market. VIX is spiking. Market is setting up for a drop. The writing is on the wall. I mean, we said all this before all this took place. Okay. So let me show you. Let's see here. Let's go to the chart. I want to show you what are some of the signs that we saw that was telling us, hey, the market is ready to go down. See, one of the first things that I realized is in order to see and view the market, you got to look at it on different time frames from the weekly chart, daily chart, monthly chart. Now, for us at Right Side Trading, we focus primarily on the daily, weekly, and monthly. We don't like to trade intraday. Okay, we're able to see, and we know that the higher the time frame, the more we're able to see. The data on the higher time frame is more reliable than the data on the smaller time frame. And so we decided no longer are we going to be focusing on intraday, because at the end of the day, we wanted to make sure that we knew where the market was going. And is it possible to still apply the same rules that I'm talking about here on the smaller time frame? Yes, you could. It's just that we chose to stick with the daily, weekly, monthly for a number of reasons. One of them also being that we didn't have to rush to make our decisions. Okay, I can take all day, I can analyze it, go to bed, wake up the next morning, and make sure that I slept over my decisions before I place the trade. A lot of people who are clients of ours tend to still, have a job, or they don't want to be fixated to the computer. So this works really, really well for them because they don't have to be worried, oh, I got to make a decision very quickly. But again, we have plenty of time because it's a daily, weekly, and monthly chart. We have plenty of time to make sure we do our analysis correctly, double check our analysis if we need to, sleep it over, and then pull the trigger, when we need to pull the trigger, okay? But here's the chart of the S&P 500 on the weekly chart. And what's interesting is I'm going to show you, we're going to go down to this very last one right here, because again, this is what we saw on January 24th. By the way, this was the weekend of January 24th. This is what we saw on January 24th. So I'm taking you back to the same time what we saw. By then, I mean, we knew there was a little bit of stories about the coronavirus, but we didn't know it was going to turn into this bad. That's the one thing I have to be honest about, is that we did not, even though we saw the warning signs, we did not expect it to be this bad, okay? But seeing the warning sign, yes, we saw the warning sign. Expecting it to be this bad, that's something we did not expect. But we saw the warning signs, and here was the warning sign. This right here, these two combinations right here, is what you call a bearish Harami signal. Now, most of you guys probably already know that, a bearish Harami, okay? But it wasn't just that, the fact that it was a bearish Harami signal. It was a bearish Harami signal that we call is also in unison. And this is where it became huge for us. See, because a bearish Harami can show up at any time, right? And there's certain things that a bearish Harami signal communicates. One of the best things a bearish Harami signal communicates, believe it or not, and I'm not sure how many people actually know this, but one of the things that the bearish Harami signal communicates is it tells you the trend is near its end. Okay, that's one of the things a bearish Harami signal does. Now, interesting enough, it's literally the only candlestick signal we know. Out of all the modern candlestick signals that we use, it's the only one that we know that literally warns us about that. And when we see a bearish Harami signal, especially after a humongous uptrend like we've seen, it usually tells you, wait a second, be careful. That trend is about to come to an end. Okay. Now, in and of itself, it's just a warning sign to say, hey, be careful. We still need some kind of confirmation to show, oh, wow, this is really going down. But like I said, what made this one very unique in particular, because guess what? Here was a bearish Harami signal here. Here was a bearish Harami signal here. The difference between these three, everybody would see this, and most people, even who studied candlesticks, would say, oh, yeah, they are the same thing. But there's a difference between this one in particular and the other two. And the difference between this was what we call the unison. And what a unison simply is when we look at this on the major markets, okay, so this only applies, it doesn't necessarily apply to stocks, but when we look at the major market, And we always like to watch the major market. We don't like paying attention to news because we can see all 5 major indices, and the data from that would tell us what's about to happen to the market. So imagine we didn't even know coronavirus was going to happen. This data right here was a bearish Harami. But what made it a unison is that when all 5 indices that we follow, all 5 of them have the exact same signal, on all those 5 that I mentioned earlier, when they all have the exact same, not a variation of it, but the exact same signal on a higher time frame, meaning the weekly or the monthly chart, higher time frame, when you have the exact same signal on a higher time frame, we have a market in unison. That, ladies and gentlemen, is a huge warning sign. A huge warning sign. So literally, that's what we saw in the report that I wrote down on that week and said, wait. You see, before you can go back, you'll see that, hey, there was a bearish Harami here, but it wasn't on the others. There was a bearish Harami here, but it wasn't on the others. So, okay, yeah, we got a bearish Harami. Be careful, watch the market closely. But when this one appeared, it was like, whoa. This doesn't usually happen. Something is about to happen to this market. Why? Because all major indices, it's almost as if everybody was beginning to like get ready. Okay. And they were getting ready for a drop. And that's why we said, wow, what's going on? So Joey's asking, what are the other major indices? So we don't look at the SPY, by the way, don't look at the SPY. Okay, a SPY is a derivative of the SPX. So you want to look at let me clear this up. We want to look at the SPX. Now, we don't trade the SPX, but we analyze the SPX. Does that make sense, Joey? All right. So you want to look at the SPX. We also look at the Dow Jones Industrial. Okay. We look at the NASDAQ. And these are the ticker symbols on Thinkorswim that I'm writing down right here. This is a $ DJI and then COMP. The next one is a Russell 2000. And the last one is the Dow Jones Transportation, DJT. Okay, not to be confused with DJI. Those are the 5. When we see the exact same signal on a daily chart, weekly chart, monthly chart, and especially the highest. So if we saw this on the monthly chart, that would even have been a bigger warning sign. Okay. But the mere fact that it was on the weekly, that's why we wrote to say, hey, wait a second. This market is not random. Somebody, and when I say somebody, I mean, we all talk about how we want to follow the big institutions, right? It's like they are doing something. They know something. Now, I don't know whether they knew it was the coronavirus and how it was going to affect them or not. I don't know whether it's because the oil situation, they knew something about the oil situation, but somebody knew something that told them, look, it's time to manipulate this market, for lack of better words. And they started positioning themselves. It's interesting enough because, unlike us retail traders, we don't have the billions of dollars to trade like they do. So it takes them time to start doing stuff. They can't just, I can go into my accounts and sell everything in one day. They can't do that. So they have to start selling off. And based on those selling that they doing, the market starts showing different patterns. And that's the beauty of all this. So nevertheless, that happened. Okay. Let me show you on the Dow Jones Industrial. This was the 24th. You can see that it's the exact same Harami signal. And what is a Harami signal? Is when we have a bearish Harami, is when we have a red candle where the top and the bottom, don't include these wicks, are inside the top and bottom of the green candle to the left. Now, keep in mind, we had no idea what's going to happen in the future. And this is one of the things I always try to tell people. I said, look, we can't necessarily predict the future because, quite honestly, we don't know what the future is going to hold. But the one thing we know is what the data is communicating right now. That's all. So because of that, some people say, oh, well, how far do you think it's going to go down? Well, we don't know how far it's going to go down. How long is it going to take? Well, we don't know how long it's going to take. But the one thing we can say is because we now have data, because we're not trying to guess. That's one of the, we call those curse words. We don't try to guess, hope, wish when it comes to trading. We want to see data, and then we just simply interpret what the data is saying. That's all we want to do. And so we said, this right here, showing up exact same signal as the S&P. If we go to the NASDAQ, you see that we had the exact same bearish signal, which is the bearish Harami signal. We go to the Russell, lo and behold, we had the exact same. This is all on that 24th. This is what we saw, okay? And then we have, Steve is saying, will you be looking for unison for a turn? We don't necessarily look for this unison, but when it appears, you have to be ready. Does that make sense? So it's not like we go out searching for a unison, but it's just one of those things is like when they appear on all 5 major indices, you have to say, whoa, 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 whoa. So what is the bullish, because we have the bullish unison as well as the bearish unison. So if we have a bullish unison, when they start showing up, it's like, wait a second, something is about to happen. And actually, I'm going to show you this on even a smaller time frame, because how we were able to see this bottom, this most recent bottom that we had, we actually saw that. We actually saw that too. And I said, wait a second, the market is attempting to rally, okay? And I had a Monday night call. I was telling people, I said, look, this is what's going to happen on Monday. Market's going to gap up, da-da-da-da-da. You'll see what happens. Okay. Now, Paul is asking, does this work on grain markets? I don't trade grain, so I have to be honest with you. I don't trade grains, but if it's candlesticks, it's candlesticks. Okay. It works on currencies. It works on futures. Okay. I've never traded grain. Okay. I've traded bonds futures. I've traded E-mini futures. I've traded gold futures. I've traded oil futures, natural gas futures, but not necessarily grains. Okay. Yeah, and that's I have no idea with grains, unfortunately. Okay, but I mean, my guess is that it's not unusual. Okay, because again, it's the same thing. All right, it's the concept is just the same. Like, what are the ones where they all work in unison? So if you were to get grains, it's like what else works in unison with grains, right? And then if you start looking at those and you understand what to look for as far as the unison is concerned, I won't be surprised that you will find them. Okay. Kelvin is asking, would you be looking for a one white shoulder pattern? Unfortunately, I don't know what that is. Unfortunately, a one white shoulder pattern. I'm not sure what that is. Okay. And part of that is it could be one of the ones that we follow. It's just that we might have called it a different name. All right. All right. So in this case, yes, the currencies, you can definitely do that against, against the dollar. Absolutely. Absolutely, Paul. So anyway, so now we have this is the Russell, and then we go to the Dow Transportation, same exact thing happening on the Dow Transportation on the weekly chart. So it doesn't matter whether we were trading the daily chart, whether we were trading the hourly chart, whether we were trading the 15-minute chart, the 1-minute chart. The fact that this is now showing up on a bigger time frame was the biggest reason why, if I go back to this report now, if I go back here, it says, because this market is in unison, we expect the uptrend has now come to an end. We need to be ready for either slowdown at best or a reversal at worst. The writing is already on the wall. It is time to take profits. It is time to exit the market. The market is warning us. So don't come back and say, oh, it's gambling. Oh, it was manipulated. No, the information, the data was there. We just fail to see the data. And in some cases, the data is so blatantly obvious, but our bias sometimes makes us not want to believe it because it's not what we want. We want to see the market keep on going higher, but it was there. It was there, okay? And so now when the market then ends up turning into this right here, you cannot say, oh, we were not warned about this. This is that warning right up here. We cannot say this is all coincidence. I don't believe it was random. At the end of the day, if you ever look up, go Google the word randomness. Randomness is a lack of pattern, an absence of pattern. This was a pattern. There was a pattern there. The bearish Harami, I didn't even invent the bearish Harami. The bearish Harami has been there for years. Okay. And the pattern occurred again. Those who took heed were able to prevent themselves from this. Okay. Now, let me do something here. If you go to the daily chart, right around here, after the market had been dropping, right down here on this day, this is when we said, wait a second, the market is putting in the bottom. Okay. And the reason why we said the market was putting in the bottom was because we saw a bearish engulfing signal. Okay. Now, a bearish engulfing signal. Now, nothing new about a bearish engulfing signal. The only thing was there was a problem with this bearish engulfing. You know what that problem is? The problem is a bearish signal is supposed to typically appear after an uptrend. After an uptrend. This bearish engulfing signal appeared when? After a downtrend. So when I saw that, I was like, wait a minute. It's trying to trick people. It's trying to trap people. So I said, okay, bearish engulfing is not supposed to be showing up after a downtrend. Now, most people who studied bearish engulfing say, oh, this is a bearish pattern. So what are they expecting? They're expecting it to go down. But what they don't realize is that, wait a second, this is part of what we consider fake signals. And unfortunately, I've seen so many people say, oh, candlestick doesn't work. It works 60% of the time, 40% of the time. And I believe it's because they never really understood and studied candlestick like we did to see. And because in the past, when I was, okay, this is a bearish engulfing, I mean, how did I figure out this is a fake signal? Because in the past, when I was trading, I thought, oh, this is a bearish engulfing. Let me short this stock, only to see it reverse against me. And every time I did that, I said, wait a second, why is it every time I see a bearish engulfing signal, some of them work, some of them doesn't work? So I went back and I started doing all kinds of analysis and studies. This is what we do. We do research. I said, show me all the bearish engulfing. Let me analyze why did some work and why did some not work? Lo and behold, we found out that all the ones that show up after a downtrend, 9 times out of 10 would fail. And I was like, wow. So what it's basically telling us is it's actually a fake bearish engulfing. I mean, it's an engulfing signal, but it's a trap. Does that make sense? It's a trap. And so we saw that on the S&P on the daily chart now, which is the lowest time frame that we go on. And I was like, okay. Let me go to the NASDAQ. And I want you guys to pay attention. This day was on the 20th, March 20th. That was on a Friday, March 20th. Okay. So then I said, well, let's go to the NASDAQ. On the 20th, I go right here. Guess what we saw? The exact same signal on the daily chart, a fake bearish engulfing signal. So we decided, let's go to the Dow Jones. We go to the Dow Jones, and lo and behold, ladies and gentlemen, guess what we saw? The exact same signal. I said, wait a second, we're about to have another what? If you guessed it right, a unison, okay? Where all of them start doing the same thing. We went to the Dow Jones Transportation. Guess what we saw on that same Friday? So, whoa. So literally I'm seeing this and I'm like, the market is about to rally. Now everybody was like, is this the bottom? I said, look, I don't know if it's the bottom, okay? But I know one thing is for sure, the market is about to rally. And I said, here's what's going to happen. I said, the market is going to go down one more day because it's going to suck people in, because everybody who's understood candlesticks or who's read candlesticks of some sort would have seen this and say, hey, wait a second, that's a bearish engulfing signal. It's time to short. They would have shorted it. Market would have gone down. Yeah, we're doing good. But I said, don't fall for it. This is what we teach at Right Side Trading. Don't fall for this. Because what's going to happen is it's a fake signal. And how do we know this is even more important or really, really important? Because we've seen it on the other indices as well. And I said, this is what's going to happen. And anybody who was on that webinar that I was on Monday night can testify to this. I said, look, market's going to go down. and then we're going to see it reverse the next day. And then when it reverses, we're going to have a rally. And this is where I told people, I'm not calling it the bottom, because again, all we can do is interpret the data that we've seen. So do you think it's going to make new all-time highs? I said, I don't know if it's going to make new all-time highs. The one thing I do know, though, is that it's telling us it's ready to go up. I literally had one of my best buddies. He was going to start shorting. And I was like, whoa, stop all your shorting. Do not short this market, at least not for now. Don't short. You don't want to be the person shorting right now. But while he's going to say, no, I know it's the market is manipulated. It's giving us fake signals. People who were aware of it was able to take advantage of it. Most people had no clue what's happening. Next day, this is what happened. I said, I'm not sure. And I literally told people, I said, look, do not be shocked if you see a green candle that gaps up the next day. This is typically what happens after a fake signal like this. And the market did this rally, and now it's doing this thing right now. So the question is, where is this market going? Is this market really random? I don't believe so. So one of the things that we did was, I realized that a lot of people have a hard time understanding candlesticks and all that kind of stuff. I realized that some people just, too emotional when it comes to this. And even though some people might understand candlesticks, for some reason, they keep on making a mistake. And so one of the things we did was we created a software. We actually purchased the software from another dude who actually created the software, a mathematician guy. And long story short, we decided to look, let's go ahead and put our understanding of, technical analysis, the way we've seen it with all the data that we've compiled over the 8 years that we've been doing this, and let it be programmed with algos to let us know what's going on. Because one of the biggest things I tell people is, look, the biggest issue is most people just don't want to believe what the market is telling us. It's there, it's telling us what to do, but people just, based on their bias, their preconceived notions, they have a hard time following through. And so what we did is, I'm going to bring this over. This is the software right here. And what we did is, we made it where the software could pretty much just let you know what's going on. Okay. Steve said, hey, we don't listen very well. I have to be honest with you, Steve, and I know I'm throwing myself under the bus. I do that sometimes too. Okay. As much experience as I have, and as much as I teach people, no, follow the rules, follow the data. There are times when I do get vulnerable. I won't lie to you. There are times when I do get vulnerable. But the cool thing is I never blame anybody else, because I know even when I'm making that mistake, I am aware of it. The one thing is, we don't guess. We don't hope. We don't wish. That's, like I told people, I said, that's a curse word when it comes to us right here, the right side trading. We don't guess, hope, and wish. Why would you guess, hope, and wish when there's data to tell you what to do? Okay. And the whole thing is to see the data, know what the data is telling you, and then expect it to do the things that it's saying it's supposed to do. It's not even what we tell it to do. It's what the data is telling us it's going to do. And so over here is our software. We made it very simple. There's so many different features, but I'm just going to highlight a few things here. One is, if you notice on this section right here to the left, okay, what we did was we said, look, what is the market condition? Okay, what is the market condition? And then most importantly is this right here where it says trade action. Okay, so that if you don't know what the candlestick is saying and all that kind of stuff, that's fine. All right, but based on our understanding of technical analysis, we say, look, if you hover over here, if you notice what happened here, okay, so the market was already going up, right? Market was going up. If you notice, prior to this drop beginning to happen, it was saying, look, the market is weak. The market is weak. Place stops. I mean, this is on a daily chart, by the way. So for those of you guys look, I don't know who to listen to. I don't know what to listen to. It's again, it's not even listening to Wally. This is just technical analysis. This is data. Okay. All right. And it says, hey, this is what it's doing right here. On this day, market conditions is weak. On this day, it's saying, look, it's weak. Place your stops. The very next day, it's saying, look, the market is weak. I mean, it's as if it's letting you know the market is weak. The market is weak. Place your stop. The market is weak. Place your stops. Anybody who paid attention to that would have avoided this big old catastrophic drop. The very next day right here, now notice what it said, strong sell short. So this is now going from, look, the uptrend is weak to now it's saying, guess what? This market is about to become bearish and it's strong. Sell, sell, sell. And if you want to short, this will be the time that you want to start shorting. So if you didn't get stopped out all this time when the market was telling you, place a stop, place a stop, place a stop, by here it was saying, man, you better sell this thing or I'm going to come over there and smack you, right? And then notice how everybody was trying to buy the whole time. See, all this being red tells you that the market is still bearish. Okay. Rob, are you one of our subscribers? I'm not sure if you're one of our subscribers. If you are, let me know. Okay, so you're not one of our subscribers. So yeah, that's why it's a little different than yours then. Okay. And I'll set in proprietary. I can't reveal that just yet. Okay. But the idea is that we have it where we make sure that technical analysis is telling us whether the market conditions are strong so that we should be trading, whether the market conditions is weak. And if it says fair, fair is just like, okay, it's not strong, it's not weak, trade at your own risk. But really, I tell people, look, if the market conditions is fair, well, don't trade. Why would you even trade when the market condition is not really strong? That's what we want. We want to trade strong. Whether it's bullish or bearish. We know it's bearish because this section is red, okay? And so during this whole time, anybody that was buying, and so this is where I started, thinking it was unfair to blame technical analysis and saying nothing works in this, in this in this volatile market, because at no point in time did the market say it's time to buy during this whole time. So anybody who was buying, I remember, especially this day right here. I remember this day right here. So many people, even on the media, were coming out. Oh, this is the bottom. This is the bottom. Let's go ahead and start buying it right now. Oh, no problem, Rob. I totally understand. No problem. Everybody was saying, buy, buy, buy. This is the bottom. And so all we did was come back and say, what is Magenta telling us based on technical analysis? I was like, no, that's not the bottom. That's not the bottom. How did we know it was not the bottom? Well, on that day, what it was telling us, the market was still weak. Now it's telling us a place to stop. So because it's bearish, it's saying place to stop. So if it's red up here, you place a stop at the top. If it's green and it's saying place to stop, you place a stop at the bottom of the candle. So over here, it's saying place your stop, but it wasn't strong. The market wasn't strong. It wasn't ready to go up yet. So we had a couple of days. And again, a lot of people got sucked into this. And the whole time it was like, nope, just place your stops. Nope, just place your stops. Place your stops. Place your stops. And then right here, what does it say? Man, market is ready to go down again. Short the heck out of this market. And so people's like, oh my gosh, the market's too volatile. There's nothing that could have told you what was going to happen. No, it did. It literally told you what was going to happen. I heard somebody mention earlier today, this company, what is it? Luckin Coffee. Okay. And, it dropped big today. There was news that, the COO was cooking the books. And so the stock dropped. Do you think that they knew that information before they announced it today? Chances are they knew that information before they announced it today. Let me show you what the chart, the Magenta was telling us prior to that. Okay. Back here, let's go here. So let's just even start here. When it started trying to go up, it said, look, market is weak, place your stop. Okay, place your stop, place your stop. Came over here, says, look, don't do anything. It's not time to short yet, but place your stop. Look at what it did right here on the 30th. Say, look, if you want to short the stock, now's the time to short. Now's the time to short. How is it that it knows this stuff? It's just, that's how technical analysis works. It interprets data. Okay, that's all it is. It interprets data and say, hey, wait a second, there's a lot of, bearish buyers to this market now. So if anybody, I don't know how much this stock is down today, but if we were to go to the chart today, let's go to the chart of LK. What is it doing today? LK, let's see. Look at this. Okay, so right around here, when everybody was thinking about buying, what did the software tell us? It said, no, short this stock. Is it coincidence that this happened? Is it random? I don't think so. I personally don't think so. And how is it that the software is able to see this and say, hey, wait a second, short this, right? Short this. And then now the stock dropped. On this day right here, it says short. It tried to rally up and say, look, just place your stop at the top, don't do anything. And then boom. Does this work on TOS? No, it doesn't work on TOS. This is actually standalone. Okay. If you go to magentatrader.com, it's just a website you go to. And, once you have, access to it, you don't need any particular platform. Very good question, by the way. Here's another one, Zoom. How many people recall Zoom was doing really well when the market was not doing so well, right? Well, this is the bullish version of this. When the market was doing really well, let me zoom in a little bit right here. I'm sorry, when the market was doing really bad, okay, during the whole time the market was doing really bad, this was telling us, get in, place your stop, da, 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 da. But here's where I want to focus on, is what happened recently. So right around here, on this day, look at what the market told us to do, or the Magenta software told us to do. It says buy Zoom. It was trading, it closed at $118 that day. Say buy it. Okay, Zoom started going up. Market was doing horrible. Zoom was going up. It was doing this. But on this day was when everybody started hearing about Zoom. By then, it was already too late. Look at what the software said then. Okay. And then right here, it says, look, don't do anything. Market is fair. Hold. Wait. What does that mean? When it says hold, it's basically saying, look, if you already were in the position, just hold on to it. Don't even place stops. So many people are worried about, when should I place my stop? When should I place my stop? This is saying, look, don't even worry about placing stop. Just don't do anything on this day. That's all it's saying. Don't do anything on that day. Don't buy, don't sell. Don't even bother placing your stops. Okay. If you were not in the trade, what it's telling you to do is saying, look, don't even get in. Just wait. Wait on the sidelines. Don't jump in. It's too late. How many times have we tried to chase stocks and we end up buying at the top? This tells you don't do that. The next day market dropped. People start panicking. Oh, it's, you know what? Just place your stop here. That's all we want you to do. Place your stop. Next day, you didn't get stopped out. It said, leave your stop in place. Next day, you didn't get stopped out. Okay. And then next thing we know, boom, place your stop. Look at what happened right here. Place your stop. So if you placed your stop, you would have been stopped out on this day right here. If anybody looks at what happens to Zoom today, Zoom, I believe, if I'm not mistaken, has dropped 11%. 11%. It told you to get in on this day. It started telling you to place your stop starting here. And it told you don't buy, don't get sucked in when everybody was trying to buy Zoom up here. It said, do not get involved in Zoom over here. Instead, place your stop, you'd have been stopped out right there. That was the first day you were stopped out. If you didn't get stopped out that day, you got stopped out this day. It prevented you from losing 11% today. Is a market random? No. Does technical analysis not work in this environment? It does work. Look at this one. Everybody's trying to buy rig, right? The oil companies, simply because what? It's dropped big. On this day when it dropped big, this was when everybody tried to start jumping into rig. Now, why did they want to jump into rig and all these oil stocks? Simply because on this day was when it came out on the news. Notice that the software had been saying, look, place your stop and start shorting the stock since February 7th. Most people were not talking about oil stocks on February 7th. But on the day when they had this big old gap down, 50% drop, now everybody, oh, is it time to go buy? And that's the biggest mistake, and one of my biggest pet peeves is when people say, buy because it's cheap. Buy because it's cheap. That's like one of the most misleading concepts I've ever seen in the trading industry. It's so misleading, it should be criminal, in my opinion. Okay? Because anybody knows Enron or Lehman Brothers or Bear Stearns, they were cheap and cheap and cheap and cheap until they went bankrupt. Okay. I had people who've never traded before coming to me and saying, hey, wait a second. I think it's time to buy oil. Oil has got to go up in price. It's got to go up in price. And I said, maybe it would. Maybe it would not. But what I'm saying is now is not the time to buy. How do you know, Wally? Well, I just go to Magenta and say, what does Magenta say? Magenta on the computer. should we be buying rig today? Comes over there and says, you know what? Just wait. If you haven't bought it, wait. You shouldn't be bullish during this whole time because we know that this whole section is red. So you should never have been bullish. So if you were bullish in this thing, you should be out of this. So when it's saying wait, it's not saying wait if you bought it. It's saying wait if you shorted it because it's bearish, right? And the whole time, at no point, not even up to yesterday, did it say buy. Yeah, I know the news came out yesterday. But for some reason, yes, it was a reaction. I'm not sure how it's actually behaving today. Let's see. Let's take a look and see. What is Rick doing today? All that rally that he had earlier this morning, gone. Is it because maybe somehow, some way, technical analysis knew that this was not going to work? Does this software work on intraday? No. Just daily chart, weekly chart, monthly chart. What about Twilio? We can add Twilio to that. Let me go ahead and put Twilio on this for you. Here's Twilio. And see what Twilio says. All right, so here's Twilio, guys. Who asked that question, by the way? Manuel. This is Twilio. Okay, so what is Twilio telling us to do? I'm not sure where you are, and I'm not going to recommend buy, sell, or anything, but technical analysis based on Magenta is telling us what? Look, if you bought Twilio back here, this is when they probably first told you to stop buying, bought it. Next day, it said, hey, buy some more. Again, every time I move the candle, just watch this section right here, guys. What is the trade action telling us to do? So right here, told you to buy. You could have bought right there. The next day, what did it tell you to do? Hey, if you want to buy more. Right here, here's one thing where we also do. We don't buy on a red candle, just so you guys know. If we're trying to go bullish, we try not to buy on a red candle, just to be on the safe side, okay? But anyways, by the time it got here, it said, look, no more buying. This is not working out anymore, okay? This is not working out anymore. Next thing you know, right here, it's saying, look, don't buy anything. This is not working out anymore. Right here, what did it tell you to do? On this day, Julio, are you seeing this? What did it tell you to do on this day right here? Place your stops. Okay? The mere fact that it was already getting weak, don't do anything, place your stop, you would have been out of the trade by now. What did it tell you to do yesterday? Okay? It's saying, look, this is a stock that is now heading back down. Let's see what it's doing today. Not sure what it's doing today, but let's see. Boom. Am I surprised that this is dropping today? Not at all. Not at all. Okay. I could look at other charts, guys, but I'm running out of time. So I unfortunately will not be able to do so. Okay. It does work on Forex as well. Okay. It works on Forex. So anybody who trades Forex, this works on Forex. If you're from Canada, it also trades Canadian stocks too as well. Okay, so we have Canadian stocks, we have Forex, we have US stocks. We're still working on putting the futures in there. No futures just yet, unfortunately. No futures yet, but we are working on getting the futures in there, all right? But it would show you US stocks. And so Joseph is asking, does Magenta suggest where exactly to place stops, what percentage or what? So what Magenta just tells you, when it tells you to place your stop, Joseph, what it's telling you, so if you were in the green, right? If this section is green right here, and it's telling you to place stop like this, you just place a stop at the low of that candle. That's it, okay? So if it's telling you to place your stop, you place your stop at the low of that candle. If it was red, and it tells you to place your stop, then when it tells you to place your stop, let me see where it's telling us to place stop here. Okay, right here. So on this candle right here, you place it at the top. Does that make sense, Joseph? So if it's red, if this section is red and it's saying place your stop, you place your stop at the top. You should not be buying if it's, you should not be bullish if this whole section is red. Just like you shouldn't be bearish if this whole section is green. Does that make sense? But in this case, because it's red, that means it's bearish. If it says place stop, you place it at the top. If you're in the green section and it says place stop, you place your stop literally at the bottom of that candle. That's all you do, okay? And that's all it's trying to do. And then now, yesterday, it said short this sucker. You know, If you look at cruise lines, same thing. What did it tell people to do on cruise lines yesterday? It was telling people short the stock. Okay, right here. It's saying short the stock. Anybody goes looks at cruise line today, everybody's, oh, cruise line, let's buy it now because it's rallying up and because of all the stimulus plan. It's like, yeah, but right now it's telling you to short this thing. And so I'm running out of time, and there's so many more features I want to share with you guys. But I'll do this. I won't be able to go through it. Here's where you can scan for a list of stocks that are, going down. And one of the cool things about this is that, if you find a stock, maybe even based on seasonality, anybody who's ever traded seasonality, if you've ever noticed, the biggest issue with people who trade seasonality is they don't know when to get in, they don't know when to get out, okay? Or they jump in too early or they jump in too late. Well, this will resolve that problem for you. Okay. And then you can also go here and you can go to the calendar and see what are the stocks. Right now, I just did April. I want stocks that have done well in the month of April, 8 times out of 10. The minimum price is $5. The minimum percentage rally is 5%. Minimum dollar is $5. And as I said, the minimum volume is 500. I can definitely change all this depending on what it is. And then it will bring you a list of stocks for the month of April that you can focus on. But rather than hoping, guessing, and wishing, when should you buy, when should you not buy, or if you got in, when should you place your stop, when should you not place your stop, Magenta will tell you when to do all that. Because it will literally tell you, place your stop. Or it will say, hold, don't do anything. When it says hold, don't do anything, don't go out there and place stops. That's what it's just telling you. Hold, don't do anything, okay? But if it says place your stop, you place your stop. If it says buy, you only want to buy when it's a strong buy. Okay, when it says a strong, or if you're going to short, you want to sell on a strong short. That's all you want to do. And then it just kind of helps you with that. So I got 5 minutes left, and man, I got so much to share, but I've run out of time. So let me just do this. I might not be able to answer questions. Here's what one person said that uses the software. Says, look, I just finished up watching your lessons from Monday night, and I have to say out of all the classes and webinars I've attended over the many years, I've never really understood or grasped the concept of when I should exit a trade until now. The lessons have changed my life, right? Wally, I've studied candlesticks to some extent, but your teaching really put rhyme to reason. I can tell you're born to be a teacher. You found the answer far more than I could learn on my own, okay? When the VIX was spiking, hey, everything that's happening in the market right now, I saw it coming, not, right now in past. It's like I saw it coming previously before all this happened, okay? So in this case, but Joey, it does have the Euro US dollar. It's in there. Unfortunately, I'm just running out of time. Here's the things that you can get with the Magenta software because I literally got 4 minutes left. And I want to show you my offer. Go to this website right here. If you're interested, give it a try, guys. Okay, we have a special right now that we have going on where you can get it for 6 months at a discounted price, plus some other stuff that I'll show you. The regular right now is typically $299, but we're doing it for $97 for anybody who wants to give it a shot. Okay, if you sign up for the $97, it will lock you in for that $97 as long as you keep on subscribing. Okay, if you cancel your subscription and then you want to come back, truth be told, then it'll be a $299 per month to use the software. Or if we have some kind of promo that we're doing then, and you can catch that promo then, that's fine. But the idea is that $97 for anybody who locks it in now, and that's between now and this weekend, you get that. All right. But you get access to the trend conditions, the trade actions, which to me is like the best things. I didn't get a chance to tell you so much about the calendar. What I didn't even get to tell you is about the earnings. Okay. And this is something we use tremendously well for pre and post earnings. Most people focus on earnings day itself. We focus on the stocks that are going to move before or after earnings. And when you know when to get in, when to place your stop, when not to buy anything because it's too late, and when to get out before it goes against you, it makes a world of a difference. Okay. And so because of that, everybody's focused on what's going to happen on earnings day itself. They want to know whether it's going to gap up on earnings or going to gap down on earnings. We don't care about that. That's the least of our worries. We've realized that the trend before or after does that. What kind of training comes with the software? Very good. We do actually have weekly webinars. Okay, so you can come to the weekly webinars. That's what you're going to get as well. You come to the weekly webinars. This is the whole special offer right here. You get 6 months of the software by itself. Usually that will cost you about $17.94. But again, All this for $497. But you come to the weekly webinars. There's going to be some tutorials that will be emailed to you as well, Steve. All right. And you'll be able to watch that as well. And then every week when you come to the webinars is on Monday nights. Those webinars are recorded. So in case you can't get there live, you'll get the recording of it the very next day. So you'll be able to see that too as well. What I'm also going to do is I'm going to throw in my right side report too as well. For those of you guys who likes to read reports, because it goes into more details. Takes my time. I show the charts. I show everything that you need to see based on candlesticks. I put that in there. If you're interested in volatility, how did we know that volatility was about to spike? I'm also going to throw that in there so you can start seeing, hey, when next time volatility starts spiking, you're not caught off guard. Okay. And then lastly, I'm having a workshop coming up this Tuesday at 6 p.m. I'm going to invite you guys to that. For everybody who signs up, you get invited to that. Okay. So you get in 6 months of the software, but all these additional stuff, okay, as a bonus is what we're going to be doing. And so my time is up. I've run out of time, unfortunately. Thank you so much, guys, for being engaging. All right. There's a lot more to this. So if you join us, sign up. I promise you, even if it means I have to get on a call with